Hi there guys, hope you're all well and welcome back to another weekly outlook video. So as always, I'm going to get straight into it. We're just going to look at the economic calendar, see what is on the calendar for the week ahead, see if there's any data we need to be aware of, and then we'll break down the dollar, the yen, Bitcoin and oil. As always, if there are any pairs that you want breaking down, please leave a comment below. Obviously, I can only do them if they are requested because I don't want to waste anyone's time. Also, once again, there will be a link to the giveaway in the bio. The first link will be a route to the Instagram post. If you comment on that and share it, you will get entered into a draw on the 1st of June to get 3 months free in the DVS community and also the analysis group. So it's free to enter and it's worth about £160 worth of prizes. So, economic calendar, let's have a look. Monday, we don't have anything really. We are only interested in the high impact events just to see if there are any things like interest rates, NFP, etc, etc. So Monday, Tuesday looks pretty clear. There's the GDP for the CAD, but not something to be too aware of. However, going into Wednesday, 3 p.m. GMT +1, you have the Bank of Canada interest rate decision. Consensus is that the bank is going to increase the interest rate, so obviously that is bullish for the Canadian dollar, but it's worth looking at the speech after. What's the tone? Is there a positive tone? Is there a negative tone? And that will obviously affect the market. Then going into Thursday, we've got nothing to worry about, but then Friday we have the big NFP, if not the most anticipated event of the month. First Friday of every month, NFP, non-farm payroll, sorry, and that is due to be worse than last time, which would be negative for the dollar. If the reading comes in nicely above 310k, that will be bullish for the US dollar. Anything below will obviously be even more negative. So that is the calendar. Let's get straight onto the charts. Going on to the DXY, these are some areas I'm interested in. So if price can come up to the 103.2 area, then I am looking for the dollar to get weak. If the dollar does actually get weak, then obviously you would look to buy pairs like pound US dollar, euro US dollar, etc. I showed you a couple of videos ago how to do this, so if you haven't already, go back and check that out. We also have the 103.6 area. To show you why these areas are of interest, if we draw a fib of the move, we have the 50 fib and the 61. There's a couple of other confluences, but we're not going to go into that. However, look, these are two areas where if price gets here, you could use that as confluence for buys on GU, EU, AU, EU, etc. Anything XXX USD is something that you will be able to trade off the back end of that. So that's the US dollar broken down. In terms of longs, we are currently bottoming out, so there's not really anywhere I can draw a fib or build confluence. So I'm just going to wait to see if we can maybe get a pump in the market. And if there is, then what we can do is look to draw a fib and look for some long opportunities or short opportunities, for example, on GU, if we manage to get to that point. So we will just see when we get there. Going on to oil, last week the 107.67 did just miss the pending. However, the week before there was a trigger in and around this area here, which would have done some nice pips. So what I'm going to start doing as well is when we have a trade that would have triggered from the previous week or missed, I'm going to keep it on the chart just so you guys can see the accuracy. But as of right now, 110 looks like a good area for longs. And so does 108.6. If price can get to these areas, then I will be happy to go long. Reason for that is obviously the Fibonacci. Need to be careful because obviously if price does pull back from here, then this does set up these nicely. However, if price continues to push up, then this fib will be extended. And all you need to do is keep an eye on that. So once again, what I'm going to advise you to do is go onto your trading view like so. Draw up these areas and just monitor how they go throughout the week. You can use oil as confluence for any CAD trades, and obviously if you're looking at the DXY, then you're looking for obviously strength and weakness within the US dollar. So extra confluence. So that is oil, 110 and 108.6, just with some Fibonacci's and other confluences. Going on to Bitcoin, so if you watched last week's video, you would have caught this 28.35 buy. That did obviously have a nice reaction. Price did come back as well and go again, but obviously only really interested in the first entry. So that's the first one on Bitcoin for us. Going on to the pair now though, 29.100 looks good for longs, 28.900 and then 28.700 as well. So these pairs are close together, or trade should I say. So if you really wanted, you can maybe enter and cover all of these areas, or what you could do is look to enter each area and cover previous structure like so. So a trade like here would look like that. A trade here would maybe look like that and cover there. And then a trade here would maybe look like that. And then obviously targeting, depends how bullish you are on Bitcoin. You can go for the highs on the 1 hour. You can go to hit some structure points like here. Anywhere you want, you can use this data and information here to interpret this for yourself. So 29.100 looking for longs, 28.900 and 28.700. So any of these areas could work. Could well be that the first area loses and then the second two work, but completely depends. Bitcoin has a mind of its own at the minute, very fundamentally driven, but you can see after the big moves last week, literally price has just been ranging since the big drop a couple of weeks ago. So that's Bitcoin. Going on to the JPY basket, however, once again, there is nothing really to work with this pair. When I say pair, it's obviously not a pair, it's just the one. Nothing really to work with. So in terms of Fibonacci's, we have no sells because price hasn't pulled back yet. If price did pull back from this area, then I could validate a Fibonacci and try trade some of these levels. However, because on Friday, price has continued to close bearish like so, then obviously there's no fib valid. So for the third week in a row, it's hard to analyze the JPY basket, and I don't want to start giving bad analysis based off that. What could potentially happen is if price comes back up into this liquidity area here, you can see every time price has hit this area about 83.70, there's been a big reaction, big reaction, big reaction, big reaction, big reaction. So continuously when price hits this area, the yen has got weak. So you could expect maybe a bounce from there, or if price can break above, then you'd be looking at something like that. So I would maybe say that price would pull back from this high and then push up, or you'd get a pullback from here. However, there's not really much to go off. And once again, liquidity wise, you've got a nice area of wicks here where you could see some yen strength, but I am not going to validate these as trades. They are just simply ideas. So let's summarize. US dollar, expecting it to get weak at 103.20 and 103.60. Draw these areas on your trading view, set alerts, and then if you can use these as confluence with other trades, then you're perfect. Oil here, you can trade these two areas on their own. However, you could also use them as confluence for CAD trades. There is also that. Bitcoin, once again, these trades are simply just trades on their own. You can take these trades, or as mentioned, you can enter one with a stop below all of the areas and then target some highs like that. Still a 2.5 R up to the high. Or if you wanted, you could be a bit more aggressive and obviously aim for something like that and then get a nice 9.7 risk to reward. So that is that. And then yen, we've not got much to work with at all. So once again, guys, if there are any pairs you want me to break down, then simply put them in the comments. If they're not in the comments, I can't break them down. Simple as that. So yeah, guys, if you've made it this far in the video, thank you very much for getting this far. Hope you all have a good trading week, and any questions at all, please leave them in the comments.